Should you break your mortgage early? It's one of the biggest questions Canadians are asking right now. On one hand, breaking your mortgage could save you tens of thousands of dollars. On the other hand, it could also be one of the most expensive mistakes you ever make. In this video, I'm going to explain why people even think about breaking their mortgage, how lenders calculate those dreaded penalties, and most importantly, when breaking actually makes financial sense. Why people consider breaking. Let's start with the obvious question. Why do people even consider breaking their mortgage in the first place? There are three main reasons. Reason one, lower interest rates. If you locked into a fixed mortgage at 5.5% 2 years ago, and now you're seeing lower rates available, it's natural to ask, should I break my mortgage to get that lower payment? Reason two, debt consolidation. Maybe you've built up some credit card debt or personal loans at 15, 18, even 20%. By breaking your mortgage and refinancing, you could roll that debt into your mortgage at a much lower rate. That can free up hundreds of dollars every month. Reason three, access to equity. Sometimes breaking early is about opportunity. You might want to pull equity out of your home to invest in real estate, start a business, or renovate. So the reasons are good, but the reality is none of this matters if the penalty wipes out your savings. How penalties work. Now, let's break down the penalty side of the equation. There are two main types of penalties in Canada. First, the simple one, 3 months interest. This usually applies to variable rate mortgages. It's exactly what it sounds like. You take your current balance, multiply the interest for 3 months, and that's your penalty. On a $400,000 mortgage at 5%, that's about $5,000. Second, the complicated one, the interest rate differential, or IRD. This is where things get tricky. Here's an example. Let's say you still owe $400,000 and you're locked in at 5% with 3 years left. If your lender's current 3-year rate is 3%, the difference is 2%. Multiply that over 3 years on your balance, and suddenly you're looking at a penalty of $20,000 or more. Now here's the kicker. Each lender calculates IRD differently. Some use discount rates, some use posted rates, and the formulas can be wildly different. I've even seen cases where people thought their penalty would be around $10,000. But when we actually requested the payout statement, it came back closer to $25,000. This is why it's so important not to guess. You need the real number. When it makes sense. So when does it make sense to actually break your mortgage? Case 1. Savings outweigh the penalty. If refinancing into a lower rate saves you, let's say, $600 a month, and your penalty is $10,000, you'll break even in just over a year and a half. From that point forward, all the savings are pure profit. Case 2. Debt consolidation. Let's say you're carrying $30,000 of credit card debt at 19%. Even if your mortgage penalty is $15,000, moving that debt into a 5% mortgage could save you hundreds every single month and stop the bleeding. Case 3. Major life changes. If you're planning to move, sell your home, or buy another property, breaking your mortgage might be inevitable. In those cases, doing it strategically can put you in a better position rather than waiting until the last minute. The key is to do the math carefully. Too many homeowners just assume breaking is always a bad idea, or always a good idea. The truth is, it depends completely on your numbers. So, should you break your mortgage early? The truth is, it can be one of the smartest financial moves you'll ever make, or one of the most costly mistakes. If you're thinking about it, the next step is simple. Get the actual penalty amount from your lender and then compare it against the savings or benefits of refinancing. And if you want help running those numbers, that's exactly what I do. Reach out to me and I'll calculate your break-even point and show you whether it makes sense for you. Thanks for watching. If you found this video helpful, hit the like button, subscribe for more Canadian mortgage tips, and share this with someone who's wondering about their mortgage. And I'll see you in the next video.